Today is Friday, February 9, 2024. It's a few minutes in front of 8:30 a.m. Eastern. There are quite a number of levels on the chart this morning that came out of the calculator. And just because of the way things are going right now, I would treat these all with reduced position sizes if the spiders get to them, which they probably will. Right now, the spiders are at 499.35. They got within 50 cents or so of 500. They pulled back quite a bit around 8 o'clock or so in the morning. And if just imagine what could happen if they do spike 500, say, and then they fall way down. I mean, anything can happen. They could spike up even higher, but if they fall way down, you don't want to be in you don't want a lot of trades to trigger at a full position size if they go through 2 or 3 of these levels. So just the awareness is how close they are to one another. They are there for reasons. They're all important. So I will be trading reduced position size today. And after the market closes, we will circle back around and analyze all the trades taken at these levels. It is now Sunday afternoon. Let's discuss what happened in the spiders and the E-mini futures on Friday. The first thing is it's official now. The SPY hit 500. They did it first in the pre-market near the opening bell, and then once the regular session opened, they climbed up there and hit that milestone by 11 o'clock or so. So where were the trades? Well, you can see that these are the 4 levels that were hit. The 5-cent buffer has already been factored in. 2 of these levels produced trades, and there was an additional trade taken for different reasons, which I'll explain in a moment. So you'll notice that the 499.16 has not been adjusted. That's because when the 9:45 a.m. candle closed, the spiders were above it by within 10 cents. And when they're that close, I don't adjust. I just execute the trade at the level. That's what I should have done, at least on this one, but I was a little late. It was a manual order. And when I placed it, it was a little higher. It was a long position here. Bought in the vicinity right after the 9:45 a.m. candle closed because I did not have it keyed into the system. And we'll look at a recording of this trade so you can see for yourself. So when I got into the trade, the entry point was a little higher, as I mentioned, and pulled back pretty quickly. I wasn't too worried because all signs on all the other charts were suggesting that the spiders were going to go higher today. 500 had already been hit in the pre-market, and it was almost too predictable that at some point today they would try for 500 in the regular session. So you'll notice right there, I added another limit order on the chart. Let me just pause this so we can talk through. In the E-minis, that was at a level that didn't really correspond with the 498.59, the calculated level in the SPY. It's because there was this spike up here in the E-minis on Thursday, and I just had a feeling that if the E-minis got down to this zone, this little area here, that would provide enough support for them to bounce. So essentially treated this area as the level below. It's pretty close, but that was the way I looked at it at the time. I'll play this so you can see that they did come down, filled it. So I was now long 4. So I adjusted my profit target. 4 ES points, slightly less than 4. It would have been a full $800 for 4 contracts at 4 points. But like I said, I didn't get the precise entry point originally on the first part of this position. But this was the first official base hit. Pretty quick and easy. They went up and satisfied it. And the next level up, you'll see this trade work out. But let's talk about the next one up, 499.72. So the expectation is, there, that trade was in the bag, that if they got up to 499.72, I'm pausing this right now to talk through this, that they would pull back enough for a base hit again by shorting here. But keep in mind that 500 is close by at this point. So thinking about shorting this in front of that number wasn't really as easy. I do trust the numbers. As you see, I had a limit order to sell 2 contracts if they touched this level. But right here, I'm going to play this again. You see they came up within 4 cents and pulled back quite a bit, enough to definitely satisfy a base hit. So in my opinion, that was a trade. So that's why I canceled it. You saw the order disappear off the chart. And I didn't want to risk it again. If they came back up, I suspected on the second or third try testing this number that they probably would have enough juice to power through it. And I didn't want to be left hanging in a short position if they continued higher. So this is satisfied. That's why it's a dotted line. In my book, it was a no trade because it's a near miss. As it turned out, I'll scrub ahead here a little bit. You can see when they finally did hit the level, 499.72 right there, they did pull back. So it worked. Good confirmation. But like I said, it's a rule of mine and I didn't want to risk it. So we'll look at the next level. So I had an order keyed in the system now for a new short trade at 510 cents to be triggered automatically if they got up there. We'll move ahead a little so you can see this. Spiders got up there, and as soon as they hit it, order of 2 more contracts was triggered to go short. And you'll see here like this spike, like some downward pressure here shortly after this trade was entered. You'll see it happen pretty soon. And this was, this is just a 1-minute chart, so it's not really all that important. Doesn't mean a whole lot. But on other charts and other indications, I got the picture that this area could be an interim top for a while, since they had already satisfied 500, and the calculated level, I'm pausing this, calculated level of 515 cents was triggered at 10 cents here. So you'll notice that I was short 2. I was going to buy 2 off of the base hit profit target, but I revised that to buy half the position off because I just thought they might pull back farther. So the expectation was, now if I got the 1 contract bought back for half the position off, then I would trail the other half at 6 points. It seemed to be enough leeway to squeeze out a few more points if they did in fact fall a little farther, as I thought they might. And yes, with a 6-point trailer, I would be out of the money a couple points on the second half of the position unless they fell quite a bit lower, but I was okay with that. I had my eye on a target farther down, right above this 498.59 level to be exact. So that's why you'll see me change this level to green later as a reference point. So I could have jumped out at any point when I was in the money. So you'll see the first part of this trade work when they came down to the base hit profit target, and I took 1 contract off. So that was $200 in the bag. And then they kept coming down farther, as I thought they would. Maybe I'll just scrub this ahead a little bit so we'll see it. There's the $200, and now I'm trailing at 6 points. And they pulled it down to where I was a point or so, a couple points into the money, another $100 just on 1 contract, 2 points. But they did not go any lower than that. I was hoping they'd come all the way down here. There we go. So it's moving, but that was as low as they got. So when it came back up and stopped me out on this trailing stop, it was just for $100. So there could be a learning opportunity here. So let me just show you this trade playing out, and then I want to talk about something else. Speeding this up a little bit so you can see that was it. They came and they satisfied it. So there it is. So let's just talk about how you probably know by now that I like to take entire positions off at a base hit profit target of 40 cents or 4 points in ES. So on a typical day where I would trade, say, 4 ES contracts, I would take all 4 contracts off at 4 points, 4 E-mini points, and pocket $800. That's pretty quick and easy, mostly easy. Sometimes I have to work a little harder and manage a trade closure. But if I use this approach like this, take half off and trail the other half, or a portion off and trail the other portion for more points, if I did that on a regular basis, would that work? Well, it would work sometimes. With a half position size in play, I would still need an additional 4 points on the second half to make the same amount of money than if I just took the entire position off at once at the 4 points from the entry. Of course, if price would continue farther in the correct direction, I could squeeze out more points, but with these levels that I calculate in the mornings, I've just found that around 4 points from the entry is the sweet spot. So for this trade that you just saw, consider what would have happened if I closed this 2 contract position out at the base hit profit target. That would have been $400, pretty quick and easy. But what I did is I took 1 contract off at the base hit, so I put $200 in the bag, and then I trailed the other contract to see how much else I can get, how much more I could get. And while it did exceed 4 additional points for a little while, I wasn't ready to jump out because my ultimate target was lower. So therein lies the conundrum for me. How far do you let trailers go? It would have been awesome if the spiders fell 20 points or more and pulled my trailer down the whole time, but how often does that happen? In my experience, I've just found that if I stick to consistent base hit profit objectives, 4 points, I end up with more points at the end of the day. But I digress. So these are the 2 trades down here and up here that were official. This was a no trade, and I added 1 down here that I considered this level when the E-minis came down here. So really 2 official base hits today, although I had basically 3.5. It's not a bad way to end the week, mostly crawling out of the hole from earlier in the week. But Monday's a new day, new week, plenty more trades to be had. Thanks for watching. I hope you learned something along the way on this video. Consider subscribing if you're so inclined. Thanks. Have a great day.